Hi, this is Rowland from Money and Markets TV. One of the biggest selling points for exchange-traded funds is their transparency. Unlike mutual funds, you can see the full list of stocks an ETF currently holds. Stock mutual funds usually have active management. That means either an individual or committee decides which stocks to buy or sell and the allocation each receives. Some active managers are better than others, of course. Over time, their talent, or lack thereof, will be evident in the results. But the choices the manager has made aren't always evident. Government regulations require funds to disclose their portfolio holdings only twice a year. Some mutual funds reveal the information more often, but rarely more than quarterly. Even then, the data is often weeks or months old before you see it. ETF sponsors, on the other hand, post their holdings on the web with daily updates. ETFs are typically designed to track indexes, which can and do change their holdings, but you will always know in advance when that happens. For a real-world example of the difference between mutual funds and ETFs, consider the offerings in the domestic small-cap value segment. On the mutual fund side, we have the Eaton Vance Small Cap Value Fund, ticker symbol EAVSX. Since 2006, it's been actively managed by the same team at Fox Asset Management. On the ETF side, we have the iShares Russell 2000 Value Index Fund, ticker symbol IWN. As the name indicates, it follows the Russell 2000 Value Index. iShares changes the ETF portfolio only when Russell adds or removes stocks from the index. The total annual returns for both funds since July of 2002 are very similar, up 6.4% for EAVSX and up 6.3% for IWN. Those figures include reinvestment of dividends and annual expenses, but exclude the additional front-end sales charge of 5.75% for the mutual fund. However, there's been a recent divergence in the fund's performance. In the first quarter of this year, the Eaton Vance Small Cap Value Fund gained 7.4%, but the iShares Russell 2000 Value Index Fund did even better, up 11.6%. This tells us that EAVSX owns some underperforming stocks. But what were those stocks? And does the fund still own them? Well, we know that at the end of last year, the fund's top holding at 3% was a company called Clico. And by the end of March, its allocation had been cut in half. We also know that another top holding, Westar Energy, is now gone from the portfolio. But whether it was sold in January, March, or somewhere in between is unknown. On the other hand, iShares has no problem sharing its holding. It even updates the information online every day. Now, in fairness to Eaton Vance and other mutual fund managers, active management is a different ballgame. But the question is whether it really brings significantly better results. Based on my findings, the answer is no. So in my opinion, there's no reason to be in a mutual fund over an ETF. I'm Ron Rowland from Money and Markets TV. Thanks for watching.